Ladies and gentlemen, good day and welcome to the Gulf Oil Lubricants Limited Q4 FY21 earnings conference call hosted by Yes Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. I now hand the conference over to Mr. Nitin Tiwari from Yes Securities. Thank you, and over to you, sir.
Thank you, Tanvi. Good evening, ladies and gentlemen. On behalf of Yes Securities, I welcome everyone to Gulf Oil Lubricants fourth quarter and FY21 earnings call. Today we have the pleasure of having with us the MD and CEO of Gulf Oil, Mr. Ravi Chawla, and the CFO, Mr. Manish Gangwal. I will now hand over the call to Mr. Chawla for his opening remarks, which shall be followed by a Q&A session. Over to you, sir.
Thank you, Nitin. Good day, good evening, and good morning to everybody who's joining us for the quarter 4 call. I hope all of you are safe and your families are safe. And of course, I would like to start off by saying that we have had a good quarter, but for us the priority now is the safety of everybody, as all of us around India go through this second wave. And just to highlight a few things to all of the people on the call, this is obviously the second wave we have seen. It has come upon us, and Gulf as a company has been not only for our employees and our associates, we have formed a special task force to take care of them and of course follow all the rules. We have also spent a lot of our time in helping to provide oxygen, to provide ventilators, even our Silvassa plant and all, helping the local authorities to deal with this national crisis that we are going through. And of course, it would definitely be, everybody needs to be safe, and that is a priority as we look at today's times. Coming to the quarter 4, again, I must say that, we have definitely seen improved demand conditions across our markets. And I would like to say here that the company has delivered significant revenue and volume growth, crossing 500 crores top line for the first time, with record quarterly volumes of 35,000 KL, which have certainly shows that the demand conditions were very good. And delighted to share with you also that this is not only the highest quarter volume of 35,000, but also the highest revenue we ever had in a quarter. And the volume growth for this quarter we have seen has been excellent. Again, more than 3 times the industry growth rate. We have had good demand conditions in quarter 4 across segments, and all segments have ended with a double-digit growth. That is again over last year quarter 4. We know last year quarter 4 was definitely March, the second week was an impact, but very happy to share that there's been excellent pickup in quarter 4. Revenues also grew by 44%, and definitely we have taken up our prices to deal with the cost challenges, and we are confident that going forward we will go in our margin range, which we always talk about. There has been enough price increases taken at this stage. As we see, margin has got impacted this quarter, but we will be doing well, and we are confident of that. And clearly that remains a focus area for us. In terms of the brand initiatives, we not only did our advertising during the IPL, we also started a new campaign, which towards the end of the quarter, which is to highlight our new improved product, which is in the motorcycle range, Gulf Pride 40 Ultra Plus. And not only did we have the product value proposition of longer drain, faster pickup, but we added protection and really consistency in protection and pickup, which is the new CVP, which we launched with a very innovative campaign towards the end of the quarter, which has had the younger Dhoni talking to the older Dhoni and giving him the message of consistency, the attribute of consistency in cricket and in the products that we have. This was a key thing that happened. And just again to share with you that during this pandemic crisis, we've also done a lot on our CSR, and mentioned a lot of work we have done with many foundations, with Hinduja Foundation, Mukul Madhav, Rotary Club, to bring in all that we could do, definitely to help us. And we have really seen that in the annual analysis, we've been able to deliver the profit and the volumes as per last year, when the industry has probably degrown double digits. So again, maintaining our record of going ahead, increasing our market shares ahead of industry. We have seen record performances of quarter 2, quarter 3 in profits and excellent growth also in quarter 4. So happy to share that this comeback we made month on month as soon as markets opened. Good discipline on our cost, robust volume, top line growth. As we face so many challenges, and in the last quarter, the challenge on the cost which came in, but the company has been focused. Margin management has been key. Volume growth has been key for us. We've not only done that, we have made sure that we have taken care of all our people, been there right through this, and passion is one of our attributes. We've continued with that, started investing in our brand again, and our brand visibility also, you must have seen during IPL, it was very high with the Chennai Super Kings, and this campaign has come back. And we are fully geared up to look at the challenges currently that are coming in and manage the second wave of COVID and ensure the safety. And our top priority is that, and also look at growth. And hopefully we will bounce back very strongly like we did last year and manage this second wave. And now hand over to Manish to take you through some of the other highlights. Manish.
Thank you, Ravi. Good afternoon, good evening, everybody. And I would say that hope you are all keeping safe and your families too. Just to add on few points what Ravi said just now, in addition to those, our battery business has done well, as we have been highlighting for the last 2 quarters also. This year as a whole has been a phenomenal year of growth for battery business. And for the full year, we have clocked in nearly 80 crore of revenue and a positive bottom line. And also the cash flow from operations have been very, very high. We have generated again 195 crore during the year as cash flow from operations versus the PAT of 200 crores. So it is nearly like 95% plus conversion of profit to cash. And we have managed our working capital very well throughout the year. Also, last 2 years, we have generated more than 425 crore of cash flow. In the years which have been difficult years, the year before was a year with automotive slowdown, and the last year we all know was a COVID impacted year. But still, we have generated more than 425 crore of cash from operations alone in these 2 years, in tough years. So that reflects well on the robustness of business of the company. And because of this, the board was also happy to increase the dividend payout ratio, and we have increased the final dividend. Board has now recommended a higher final dividend of 450%, nearly 9 rupees per share, as against, so the full year dividend goes to around 16 rupees versus last year 14 rupees on the same PAT. So that also is quite encouraging and shows the confidence of the board in the business model and the future ahead. With that, we would be happy to now take questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will request you to restrict your questions to 2 per participant. If you have any more questions, you may come back in the queue. We will wait for a moment while the question queue assembles. The first question is from the line of Sabri Hazarika from MK Global. Please go ahead.
Yeah, good afternoon, sir. I have 2 questions. The first one is your EBITDA margin outlook. So right now, so we have seen Q4 EBITDA margin fall to around 15%, versus I guess 18% was the guidance. Now, if you take a price hike also, I think on a percentage terms, I think significant price hikes could be required, because already we have cost rising significantly, and now also crude oil prices are quite strong at $70. So do you, on an EBITDA per liter basis, I think things are more comfortable, but on a margin front, it looks, it looks that you need to take substantial hike going ahead. So you still maintain 18% or EBITDA per liter will be a better representative now?
Manish, you want to go?
Yeah, thanks, Abri. You see, the quarter has seen an unprecedented hike in the base oil prices globally, including in India. And those prices, as we have been always highlighting that the industry has been such that with a time lag, you are in a position to pass on those increases to the end consumer customers, but that takes some time. And we have taken price actions, as you mentioned, in this period to manage the margins. But to cope up with such a significant increase of nearly 5% gross margin erosion in one quarter you have seen, we have been able to manage cost, and because of a good top line and robust demand, the operating leverage came in, which gave us nearly 2%, 3% advantage, and overall the margin was slightly lower at EBITDA level to around 15% plus. For the full year, I would say that it's very difficult to talk of quarters, but for the full year, we would still aim at the band which we have been always talking about, 16-18% band, depending on how the market moves. Of course, the quarter one will be a challenge because of on the both fronts, not only the cost and also because the demand conditions because of second wave and lockdowns. But overall, we have seen last year, and you all have noticed that once the lockdowns were lifted from June onwards, June 20 onwards, the business bounced back very sharply and swiftly, and we delivered record quarters of profit in quarter two, quarter three, and a very good quarter on top line for quarter four as well, and of course a decent bottom line. So we are quite hopeful that this business, being a semi-essential business, semi-essential category business, it bounces back very swiftly, sharply, and we hope that once the lockdowns of the second wave ease out, and from June onwards, somewhere in June, things will start improving and we will be able to bounce back very sharply. And overall, for the full year, we will still try to aim the same band of margins, but we have to really wait and see as the things pan out.
Okay. Second question is more related to certain bookkeeping numbers. The first one is you have, it's a small amount, but your CWIP is somewhere like 3.7 crore for FY21 end versus, I guess, 70 lakh, 66 lakhs, which was in FY20. So, what would that be?
These are some of the capex which is ongoing, which is not yet capitalized.
So this pertains to core business, or it's something to do?
Yeah, mostly in the plant. You have to keep doing some base oil tankages. You have to keep adding some of the peripheral infrastructure on account of that.
Okay, and for the full year, your volumes will be how much? 115,000 KL. That will be the number.
For the last year, yes, 115,000 KL.
115,000 KL. Okay, and the price hike you said you have taken. So when was the last price hike you have taken? Last two price hikes.
Ravi, you want to take that?
Yeah, so different segments, we have different price increases. So in the bazaar, I think right from December, we have been taking up. There have been 2 to 3 price increases there. And I think with OEMs, you have a formula. And then, of course, industrial also, we have taken prices 2 times. So this is, as we get an opportunity, we keep taking up, and this is some of the dates which we can remember, but it is regular. Last I think 3 to 4 months, we have gone up twice or thrice.
Okay. Okay, thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Viral Kacharia from Security Investment Management. Please go ahead.
Yeah, thanks for the opportunity and congratulations for good set of results in such a challenging environment. So my questions are largely on the EV readiness for the company. Just trying to understand, what is our play with respect to EV fluid? So, if you can just give some color in terms of where are we, any pipeline you can give, both with the incumbents and the non-incumbent players, what is our readiness and capability here? So that is one. And second is related to EV fluid. Second is compared to an ICE, loops and all, how does the ASP, the grain interval, really work. So, if you can just give some color on that.
Yeah, so Viral, we have a range of EV fluids which we have launched globally. We'll be obviously introducing them in India, but the requirement is not very high at the moment, as you know the numbers. Now, EV fluids is of course the fully electric don't require any engine oil. So the consumption, if you are looking at fully electric conversion, the engine oil goes away, which is a major part. So they do have some other fluids. So we have those products which we look at segment-wise, which we'll offer, but not much volume in that, as you know now, with the EV population, though it's growing. Going forward, we are looking at the EV value chain. We don't have petrol stations, so obviously we want to use where we have already made an announcement of a small investment in a UK-based company called Indra, who's making chargers for the home charging and other V2G requirements. So we are studying that and fine-tuning that on how we can look at those products in India. And other parts of the value chain also we are studying which we can participate. So I guess once the plans are firmed up, we will get back to all of you. And regarding the growth of lubricants, I think we have been saying that very often that, given the population of the ICE engines in various segments, whether you take trucks, tractors, cars, of course, bikes also are there, and the industrial engines and all which are there in construction equipments, the lubricant demand will continue to be there, both in terms of penetration numbers and replacement. For at least 2 decades, we look at the demand growing, India being a large market. But yes, as an EV value chain, we are looking at options, how we can get in and have a larger play. And as I mentioned, Indra is one of such association where we have firmed up and we are looking at how we can bring their markets to India, and EV fluids will be there as required.
So, it's good to know we have already developed the capability. So far we've just known the MNCs having to develop it. So just 3 more follow-ups on this. One is, what is the barrier in EV fluids and, how complex the technology is for one to make it? So just still trying to understand. I understand it right now may be quite small, but it's like a market for future. So just trying to understand this a little bit better.
So we have the whole range, Viral. We can bring the range, but you see right now the requirement is very low with the numbers that you have now. OEMs and others are making.
Yeah.
So we can give it, but obviously once the fully electric vehicle comes, there'll be no engine oil, which is the main thing. So the impact of that is definitely in cars and two-wheelers also. You see people are trying a lot. But so we'll have the fluids. The technology is available in our global technology.
And what is typically, indicatively, what will be the ASP and the life cycle of an EV compared to an ICE?
Yeah, so it is definitely there's no engine oil. So the other fluids will be, I would say definitely they will not change as often as the current one. But these are all transmission fluids and other coolants and all which come in. So engine oil not being there, obviously it's, the volumes will come down if it's a fully electric vehicle. In hybrid it is similar, but the usage of the engine depends on that. India is of course trying to go fully electric. So life-wise, we'll have to see the conditions here, how these various products come in and what is the life cycle.
Okay, and are we there with any of the non-incumbent players, say Ola or Ather or even with Ampere? So they have pretty aggressive expansion plans.
Yeah, so we are not able to announce anything, but obviously we are looking at the EV value chain as we told you.
Okay, thank you and good luck.
Thank you.
Thank you very much. Participants, if you have any questions, please enter star and 1. The next question is from the line of Manikantha Garre from Axis Capital. Please go ahead.
Good evening, sirs, and hope both of you are doing well. Just wanted to ask a couple of questions. To start with the bookkeeping question, sir. What is the A&P percentage spend as a percent of sales in Q4, sir?
Manish?
It's 4% for the quarter, Manikantha, because we had IPL during the quarter. We had a campaign, as Ravi mentioned, of Dhoni versus Dhoni. So it's 4% for the quarter.
Okay, so if it is 4%, then the other expenses looks like has fallen significantly by 14% quarter-on-quarter basis, despite our volumes have increased 6%. So can you give more color on that other expenses part? How are we, where are we controlling the cost there?
So as we have done a cost optimization across, and of course travel was not there, and there have been operating leverage as a percentage also. If you are talking of absolute number, we have done almost similar number, But as a percentage, because the top line growth has been very robust, the operating leverage part has come in and the percentage looks better.
Understood. And sir, with respect to the volumes, I know that we have started getting benefits from the pent-up demand from Q2 onwards itself, and that was very much helpful for us in Q3. Just want to understand a little bit more about the incremental volumes that we got in Q4. So we have seen 2 million liters incremental volumes in Q4. Which segments out of the three, B2B, volume and industrial, I think you mentioned in the press release that these are the segments where we have record volumes again. So which out of these three has helped us, out of these 2 million liter incremental volumes that we have seen? Or anything with respect to that?
Manish, you want to?
All segments, Manikantha has delivered double-digit growth for us in this quarter 4. All segments, all business segments.
Understand. So
the growth has been across the board, across all segments, and including retail, infrastructure, channel, OEM. OEM also had a very good quarter 4. So across we had a very good exports also. So I think the volume has come from all segments, nothing particular specific. Even B2B industrial has done very well for us, the industrial segment, core industrial segment. So all segments have pitched in with double digit.
So sir, so on that context, can you please give us the latest product and volume mix for Q4?
So as all the volume, all the segments have grown, double digit. The product mix more or less remains the same. Even personal mobility has grown double digit. So across the board, more or less, the product mix also remains the same.
So last quarter was 65-35 for B2C and B2B. That remains same is what you are saying, right, sir?
No, so 65-35 has come down to nearly 60-40 for the quarter. Because again in the month of March, some of the western parts of India announced a partial lockdown, Maharashtra, parts of MP, Gujarat, etc., because the second wave started coming in. But more or less, I would say the product mix is similar. Plus minus 1% here and there in categories.
Understood. So the volume mix remain more or less same at 37%, 24.
Yes.
Industrial remain at 15%, sir?
Sorry?
Industrial segments volumes remained at 15%?
Yeah, it has gone up by 1-2%, yeah.
Sure, sir. Last question with respect to the price hike. I think you have mentioned earlier that by Q1 also we may not be taking the full price hike. If we think that by June end we'll have unlock and we'll be able to come back soon with higher volumes vigorously, can we expect by Q2 end that all the price hikes that would have been necessary would have been taken, or it would be a more gradual process than that?
No, so we have already announced all the price hikes, including 3 price hikes in retail over the last 4 months, 5 months. But all of that will start flowing in from Q2, yeah, because it takes some time. Channel has inventory and there are lockdowns, and also it takes slightly a longer time because the inventory has to move to the market. But from Q2 we should be able to have definitely full realization of whatever we have announced.
Okay, and the April hikes for OEMs and industry, OEMs and practices have been taken or not? Okay.
Yeah, so OEMs are on formula basis, on quarterly basis, and with some we have 6 monthly basis. So that keeps coming every quarter. So something came in January, something has further come in April, and some more may come from July also, depending on how the base oil is behaving. So that is quite a standardized process, I would say. With B2B, we have to negotiate, and many of the negotiations have already been done. In B2B distributor business, we have already taken price hikes, and in, of course, retail, we have already taken price hikes.
Understand, sir. Thank you so much, and wish you all the best.
Thank you.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of B. Tatar, individual investor. Please go ahead.
Hello. Congrats for the good Q4 numbers, sir. And I think my question has already been answered by the management. Thanks.
Okay, thank you.
Thank you very much. The next question is from the line of Viral Kacharia from Security Investment Management. Please go ahead. Mr. Viral Kacharia, your line has been unmuted. You may proceed with your question, please.
Yeah, thanks for the opportunity again. Just had two follow-up questions. One is on the raw material price trend. So, I mean, are we seeing any, if you can just provide some color, how is the RM inflation now been for last few months? Is it so the kind of price increase which we talked about, 3 in the retail, would that be enough to kind of cover the whole RM inflation we have seen, or we would have to take few more price increase to cover the inflation?
Ravi, you want to take?
No, you can go ahead.
Yeah, so basically, we have taken price increases, and base oil, what we have seen over the last, 2-3 weeks is also stabilizing at those higher levels. So the upward trend has sort of been slightly controlled, and it's not as steep as it has been in the earlier period. And as we see going forward, the unlocking and the economy start picking up, not only in India, it's more about global. As we see that US has started, now economy has started picking up, and air traffic has improved, and within Europe the air traffic has improved, the vehicle movements have improved. So the refineries will be more now confident to ramp up the supplies. And with that, the pressure, it was more driven by the base oil pricing was more driven by supply constraint rather than, anything else. So if that, in the refining process, air turbine fuel, petrol, diesel, all those are the first cuts and first, second, third cut, and then comes the base oil. So since the demand for the top tier cuts products were not there, the base oil also came under supply constraint. But as the things start moving up on the other fronts, demand on other fronts, we hope that base oil supply constraint will ease out. Time frame is very difficult to say, but yes, we are seeing some stabilization at these higher levels for the base oil.
So cumulatively, in the retail segment, the bazaar, what will be the price increase we have taken so far, cumulatively?
No, it's very different from product segment to product segment for motorcycle, diesel engine oil, and personal mobility. So very difficult to give a number. But overall, we are saying that yes, whatever the increase so far we have seen, we would be largely able to absorb that once these price increases are realized in the market.
Okay. And in the bazaar segment, especially in the two-wheeler and the four-wheeler segment in retail, for us, how would our market share moved in last 1 year?
Ravi?
Yeah. So you see, as I mentioned to you, having seen that April and May last year were very challenging months, and also in June you saw certain pickups in certain segments. Diesel engine oil came a little late. So the market has not grown in these segments. Now, if you look at our growth, we have always been saying that we have been growing 2 to 3 times the market growth rate. So certainly our growths that have come in the last 3 quarters has enabled us to grow very well across. And I think market share gain for us has happened because overall market has been double-digit down, and we have managed to get the same volumes overall. Getting into specific segments, I think bazaar, we must say that yes, there is a challenge because 2.5 months, there was not much sale. But we have been well ahead of the industry. So I think we have continued this 2 to 3 times the industry growth rate, and therefore increased our market share across segments. Agriculture, two-wheeler, passenger car, commercial vehicle, rural. So I think what I can assure you is that we have grown our market share, and the growth figures also speak for themselves.
Okay. And incrementally, would distribution be a driver for us?
100%. We have got now 70,000 plus touch points. Our brand consideration is one of the top, I would say 2 to 3. We have clearly seen the data. So adding touch points has always been our mantra. And we have invested a lot both in urban and rural distribution to take our touch points. And as you see, our volume growth has been consistent for so many years. Even our distribution growth has been in line with the volume growth. So this continues to be a focus on adding outlets so that the brand is available for customers to buy.
Okay. And lastly, if you can just provide some color, how is the synthetic share of synthetic in terms of total volume?
Yeah, so synthetics, I've been telling that the synthetics is, semi-synthetic synthetics. So again, like if we are trying to grow our normal business by X, we would try to grow many multiple of that X in the synthetics. So it's a very small percentage, single digit, but we continue to focus to make that, a big segment of growth for us going forward.
Okay. Thank you very much and good luck.
Thank you so much. Thank you.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Nitin Tiwari from Yes Securities. Please go ahead.
Hi, sir. Actually, I have a question on in the OEM part of the business, and there is a wider belief that post-pandemic and with whatever has happened in the personal mobility space would see a growth in terms of people having a tendency to purchase more personal vehicles, be it two-wheelers or four-wheelers. So are you seeing such demand trends from OEM side as well, or possibly orders coming down for several months down the line for possibly a higher production of or higher requirement for lubricating oil from the OEM segment? So that's one.
Yeah, I think Nitin, Manish mentioned that even OEMs, the factory fill did well in Q4, right? Manish, you mentioned that, I think.
Yes.
And you see, we have obviously got a challenge with the current lockdowns. But whatever we are hearing from the OEMs, everybody is looking to make a comeback, and definitely the prognosis for the year ahead in terms of automotive OEMs across segments is quite robust, with the GDP growth predicted to be, whatever we are talking. So I think that we continue to be optimistic. Of course, the second wave has caused a market closure in parts, I would say in phases. So the figures coming in from the OEMs also will be a positive growth forward in the next year.
Great. And yeah.
Yeah, Nitin. So Nitin, I don't know if I answered your question. Definitely everybody is looking at good growth in the OEM new vehicles.
Yeah, so that answers the question. I was asking more from the perspective of, is there a higher requirement for lubricant oil which is getting indicated from OEMs and to you guys, expecting a higher sales down the year. So that was what primarily my question was, because it is widely believed that people will now have a more sort of an affinity towards personal vehicle rather than using public transport.
Yeah, you are right. You are right. See, you are right. What has happened is that personal mobility, whether it is bike and also public transport being curtailed in many ways, we did see that bikes and cars, definitely people were using more in Q2, Q3 and even Q4. So definitely personal mobility requirements went up because, also public transportation was limited, and people were preferring to travel alone on the bike, for example. So you have seen that. Your observation is absolutely right. But of course, given what has happened now on partial closure, we hope that the comeback like last year also is strong. And of course, the first thing is the safety. But yes, the offshoot of that is more two-wheelers are being used as personal mobility as and when, the people have to move around.
Right, sir. My second question was around competitive action in the fourth quarter, which is the March quarter. So did we see competitive activity in the CV segment, and did that impact our realizations or margins in that segment?
No, there is no specific action in terms of any segment as such. As we saw the cost going up, everybody has come with price increases. And I think segment-wise, definitely you see that certain segments, last year, for example, agriculture did very well initially, then diesel engine oils took some time. Three-wheelers are taking time to, come in. So I think it's a segment-wise sort of approach. And as and when the seasonality comes, people do put in some inputs. But we have not seen anything where there has been any drastic sort of change in the competitive scenario and pricing.
Right. So because of what I gathered is that, one of the large competitors probably, did some correction on the price premiums in the CV segment. So I was wondering if that impacted us in any way.
There are schemes that people give out. So based on for Gulf, the positioning is very clear where we'd like to position our brand, and definitely some of the other players that are there would have some pricing strategies which they want to look at volume growth. So we obviously need to calibrate and also make sure that our strengths are to the fore.
Sure, sir. Thank you so much for answering this question.
Thank you.
Thank you. Participants, if you have any questions, please enter star and 1. We have a question from the line of Manikanta Kare, Axis Capital. Please go ahead.
Sir, just two more questions from my side. You mentioned that the full year industry growth was negative double digit. Do you have the number for Q4, how the industry has moved in Q4?
See, Mr. Gare, there is nothing published for this. This is an estimate we get from our own MIS and other things. So because a lot of the private sector and other players. So there is no quarter four real analysis as we have done, but at some point of time we have our own estimate segment wise. So it is obviously quarter four has been good for demand overall. That is what we know.
Got it. And the 2 to 3x of, can that be assumed that we would have achieved?
Yes.
Okay. And the second question is, sir, can you give us the latest count of touch points, bike stops, pit stops, and rural outlets by the end of FY21?
So I think we have indicated it's 70,000. And Manish, you want to just give the bike stop figures, the latest?
Yeah, it has remained more or less similar because the activities on the ground, because of the safety of employees have been we have been very, very controlled in terms of people movement within the organization. So the distribution side, you can take actually the numbers as more or less the same, 70,000 retail touch points and nearly 8,000 bike stops, which we had announced earlier. These are in the similar range only currently. Because you need to do a lot of BTL and all to grow this further. So as soon as now the movement starts, we have to pick up that again.
Okay, and so just to follow up on this only, because agri was doing well for us, did we try increasing our rural outlets and did we get that chance, or that also was not possible?
So rural has gone up for us, definitely during these times as well. So because that is one segment which was, especially in the wave one, it was very less impacted. So we got the growth on the rural distribution definitely. Of course, last 3 months, the rural also is impacted as far as the COVID second wave is concerned.
Yes, and would you have a number there? How many rural outlets at the end of FY21? Or I can check.
No, so I don't have the latest count on that. We will come back to you maybe separately.
Sure, sir. Thank you. Thank you so much.
Thank you. Reminder to participants, if you have any questions, please enter star and 1 on your phone. As there are no further questions, I now hand the conference. Sorry, there is one question from Anush Sharma, M3 Investment. Can we take that?
Yeah, please.
Yes. Anush Sharma, please go ahead.
Yeah, thank you for this. My questions were just on the synthetic side. You said that we have a single-digit revenue contribution from synthetic. And now, what is the rate at which market is evolving in synthetic? Can you just give some color as to the market growth and evolution?
Yeah, Anu, just to clarify, I meant that, there are two types of synthetic, semi-synthetic and fully synthetic. And there is mineral-based and there is, the POA ester-based, which is the chemical. So I meant that the percentage of synthetics varies across segments and semi-synthetics are slightly higher. These percentage as an industry is single digit. Okay. For us also it is single digit low. So we see potential in growing to a higher level, which some of our competitors have, maybe a higher level. As an industry, of course, we are doing well, but we need to grow more than that. So when you go into this range, the idea is that if you are growing X in your normal overall range, you would like to, if you want to gain market share, you should grow 2 to 3x of that. So for us, it is a multiplier effect. And quite honestly, when we look at synthetics, the pure synthetics, which are PO ester based, are very expensive. They're probably used in high-end bikes and cars. And we are seeing that as and when we bring in these higher products, this is also where we like to sell more. So there are plans, and I would say this year again with the COVID challenges, we have obviously got plans to take this further. And, we have been going 2 to 3x anyway the market. But in synthetics, we would like to grow multiple of that 2 to 3x. So this is our efforts, and at some point of time, obviously, we hope it can become a good growth engine. At the moment, it is to, focus more on the semi-synthetics and the mineral synthetics. So we are obviously, passenger car, motor oils, the motorcycle oils, some of the industrials also have. So we are obviously working on this and hope to increase our market shares here going forward.
Sure. So I wanted to understand what has been the natural growth of both semi and synthetics in our Indian markets.
Yeah, I think.
So what is that X? Yeah.
Yeah. So I think, as I told you, single digit could be anything, around 4-5% as an industry. So
Okay.
again, you have to look at the semi-synthetic. So slightly complicated because you don't do that breakup, though we have it segment-wise. It will be difficult to explain over a call. So definitely, if we say that we want to grow our market share by X, but we want to grow our synthetic market share 3 times X. So I guess each segment is a different play, and I would say that it is still below 5% for the industry.
All right. Thank you. And also on this, is it the natural demand which is coming because of better engines or better or higher end engines being sold, or there is a case to be made in the regular engines as well for these types of oils? And what is the strategy to drive up the market share, the 2 to 3x? Can you just explain something on that?
Yeah. So the strategy is obviously there's a pricing element. When you buy a fully synthetic, it's more expensive. So if you want to really buy a fully synthetic, you have to pay more. So how much will people pay more? And also to tell you, like for example, now BS6 lubricants. BS6 lubricants, they're much better lubricants. They are giving better performance. They are mineral based. So those are also better products for better engines and better emissions. So I think the market is moving towards these BS6 engines, which also will deliver better value. So we are working on this BS6, which we already have. And synthetics, I think there's going to be a price point if you want to go fully synthetic. India still, we feel it's still a niche market. But certainly semi-synthetics are growing. So we will continue following that market and, of course, trying to push more, like we are trying to push more passenger car motor oil. So there we have scope to grow more.
All right. Thank you for this.
Yeah.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Viral Kacharia, Security Investment Management. Please go ahead.
Yeah, thanks for one more follow-up. I just had a follow-up on the previous participant's question. So for BS6, what will be the typical price increase versus a BS4 lubricant? So, and correspondingly, is there any additional cost pertaining to that? So that is one. And second is, when we say a BS6 lubricant, so does this the past park size of, say, BS4 vehicles or even older vehicles, they also become eligible for, so is it like a complete upgrade of the overall park size to a BS6 lubricant, or it's more like a gradual process in terms of adoption of BS6 lubricant?
See, BS6 in different segments are different requirements. Just to tell you that they have to have a low ash and sulfur because of they have to deal with a different fuel and engine and also have lower emission. So every vehicle will require different oil, which they cannot be, what they're using in BS4 will not work. So this is where we have launched the product. Each product definitely requires more of technology. So it is more expensive than the BS4. So there is a pass on of the cost, and that is across, say, commercial vehicles, car, bikes, all this happens. And this is definitely, it's more expensive to make. It has to meet the emission standards. It has to meet the engine requirements, what we call low SAPS oils, and that is one commercial vehicle. So this has already happened. We've also done one more thing, is that our BS6 commercial vehicle oil can be used in the BS4 vehicle for a higher life. So we have done that compatibility. So it can be used, the higher oil can be used in the BS4 also. It is compatible for commercial vehicles. So that is to explain to you that definitely the oil requirement for a BS6 vehicle is at a higher level. And as and when these BS6 vehicles come, the proportion of that sale will go up. But you must remember one thing, that there's a huge population of BS4 also currently, which we service. So I say gradually, over the next 5-10 years, you will see more of BS6 oil selling.
So the reason I was asking is, one of the other larger players in the space has been, talking about the existing stock of BS4 also being a very attractive market for upgradation to BS6 loops. So I'm just trying to understand,
that's what I told you. Yeah, that is what I told you. The BS6 oil can also be used for the BS4 vehicle to give better performance. But obviously you'll have to pay a slightly higher price for that.
Got it. And what would typically the price inflation be? I mean, just to get a...
It varies. So it varies from high single digit to double digit.
Okay. And second question was on the synthetic part. So if you look at, certain major advanced markets, say US, Europe, or even China for that matter, the share of synthetic is, significantly high double digits. So if you have to learn from, how the evolution scale-up of synthetic has been in those markets. So other than price or affordability, are there any other factors that drive the acceleration in terms of adoption of synthetic, fully synthetic or semi-synthetic?
One is the adoption of technology, which anyway we are going towards that semi-synthetic, synthetic. And the other is, of course, the price differential. So each economy has behaved differently, but obviously European economies and US have gone faster because they have also, had that the affordability factor on the price. I think it's a combination of both, and whatever learning is there is obviously as lubricant companies, you would like to sell the higher technology which OEMs want. So everybody is in that direction, but you cannot get away from the fact that there will be a lot of vehicles which are using a BS4 or a so I think yes you have to manage both.
Okay, fine. Thank you. And good luck.
Thank you.
Thank you. The next question is from the line of Manikanta Gare from Axis Capital. Please go ahead.
Thanks for providing me the opportunity again. Sir, just on the semi-synthetic, you mentioned that industry is growing at 4 to 5%, and we would like to grow at multiple of 2 to 3 years. That means can we expect more than 25-30%? I agree that the base is very low, so can we expect that kind of volume growth here, 30%?
So Manikant, we can take this offline. 4 to 5% is our estimate of the percentage of synthetics and semi-synthetic. The growth rates I refer to the percentage that we think the semi-synthetic and synthetic is as a total, not the growth rate.
Okay. Sure, sir.
Sure. Thank you. That was the last question. I now hand the conference over to management for closing comments.
Yeah. Thank you, ma'am. Well, I'd like to thank all of you for your time for the call, and we have tried to obviously answer the questions to the best of our ability. I would just like to say that quarter 4 for us with the records on volumes, revenue, and managing the challenges have been obviously the key things for us. We are hoping that going forward we can see a phase, opening of the lockdown and get back to demand, which we believe will be the pent-up demand is there. Lubricant being semi-essential, we hope we can meet that as we have done successfully. Obviously, safety is primary importance to all of us. And we thank you all for your help. And of course, I'd like to thank my team and all of you for your good wishes, and of course the team for the good performance. And hope to see you soon. Thank you so much.
Thank you very much, sir. On behalf of Yes Securities India Limited, that concludes the conference. Thank you for joining us, and you may now disconnect.